Okay, well, hello, everybody. We'll go ahead and get things started. Um, everybody, I have muted your phones, so if you have a question or comment, please use the chat area to ask your questions and submit them that way, and we'll get to all of them before the webinar ends. I wanted to just take a minute and say thank you for taking the time to be with us today. Presenting and going over the training material today is Rick Ralph. He's our Chief Marketing Officer and Senior Vice President of Columbian Financial Group. And without any further ado, Rick, I'll turn things over to you.
All right, thank you, Mark. You hear me okay?
Yes, sir.
All right, well, good afternoon, everybody. Happy Friday. Great to be with all of you. We're really excited to bring this opportunity to you and have a chance to just explore our new whole life contract, the Life Solutions product. I think you'll see it's got a lot of value. It's got a lot of options. And without further ado, we'll just jump right in. So could we go to the first slide, please? Okay. Now, what I would want to mention here is just that you don't need to take copious notes. We're going to send you an email Monday, and included with the email will be a copy of the presentation, a short training video, an agent guide, a sample application. Now, it may not be the exact app for your state, but you'll get the look and feel. And if you go to our website, you'll be able to figure out if that is the correct app for your state if you haven't worked with this product before. And we'll also send you a link to the illustration software. As Mark mentioned, we've muted the phones to help with just the noise. And so you can just ask questions through the chat feature. There are 7 buttons along the bottom of the screen. The one in the center is the chat button. So, but we're excited to be with you. And let's talk a little bit about the product. Late last year, all companies that sell life insurance had to update their life insurance products with a brand new mortality table, the 2017 mortality table. So we decided not to just change rates in some of our products. We thought, let's really tune up a product and bring a lot of new ideas to the field. So that's what we've done here with Life Solutions. This is a fully underwritten product. Now, typically, most of our stuff is simplified issue. This one, we wanted to make it fully underwritten, and I'll explain a little bit as we get into it about that. It matures at age 121. People are living longer. In fact, I saw something the other day where scientists say that there's someone on the earth right now that'll be the first person to live to be 150 years old. They're already here among us. When you think about it, that's pretty close to doubling our current average age in our country, which is in the mid 80s. So it's phenomenal to think that we're going to have those advances even more so. But it certainly indicates that people live longer. That's why you want your policy to mature at a later time period. It's a whole life contract, so it's level premiums, level death benefit. Rates can't go up on you. Death benefit can't go down. High cash values, and we'll spend some time talking about that. That plays a key role in this product with a variety of riders. So you really have an opportunity to use this product with just an awful lot of value. Now, premiums are payable to age 90, but one of the nice things we've done is we've set it up so we can reduce pay it in a much shorter time period, and we'll spend a little time talking about that. For those of you that may remember back, the Batman, when it was on TV years ago, he always wore a utility belt. And that utility belt, he always seemed to have a solution for anything. He needed to climb a building, or he needed to knock down a bad guy, or spray some gas on a dog, or whatever. He always had a solution in that belt. And I look at this product to be a lot like that utility belt. It's just jam-packed with value, has a lot of options. And I think you'll see that as we go through the presentation. Next slide, please. So we had last year 3 very fine whole life contracts. We had Caring Solutions, we had New Century Classic Whole Life, and we had Flagship. And each one had its strengths and weaknesses. When we were faced with having to design a product with a new mortality table, we got our marketing folks together, and we got input from folks like yourself from the field, and we said, okay, we want to come out with one product. So what do we need to do to get everything that people are going to want in here? And I think that's what you're going to see we've done here. We came up with a preferred rate class so we can have competitive rates, and it starts at 100,000 and goes to $500,000. Very competitive commissions. We've added 3 really exciting riders. We have a guaranteed purchase option rider, which will allow you to add coverage without underwriting in the future. We have living benefit riders where your clients can access a part of the proceeds because they have a medical situation and they want to take care of those, whatever the needs are related to that while they're alive. We have a new grandchild rider. If you've worked with us in our final expense product, you've seen a variation of the grandchild rider, and we brought it over here as well. And we're really excited, and we'll talk about what extra strength that brings to that policy for you. Now, we have high cash values in here, and these allow us to really have a nice paid up policy, a reduced paid up policy in 10 or 20 years. In fact, in year 20, as it says on this slide, the RPU value is 75% or more of the base policy amount at most ages. Let me say that again. In 20 years, you paid in enough premium that almost every policy has an RPU value of 75% of the death benefit. And the reason it says most ages, there were a few ages I saw where it was 74 point something. It wasn't quite 75, but we designed it with that kind of cash value buildup to turn it into a paid up policy in mind. And I think it's working very well. We have come out with a product. We've had it out for a short period of time, getting a lot of sales without really any kind of introductory training like we're doing here today. Next slide, please. I love this slide. Really demonstrates in the child market what we're talking about with this product. You see here a 1-year-old young lady, and the policy that her family purchases is $26,052. Kind of an odd amount, I'll grant you, but stick with me. Pay $13.50 a month for 20 years, and then when she's 21 years old, she has a paid up policy for $25,000. In this case, at the young age, 96% of the face value. Now, this is a great opportunity for a child market, and we have a brochure, we have a sample or picture of it here on the slide, getting a lot of play in that market. So I would encourage you to take a look at that. It's an excellent brochure, just truly a great policy for kids. Next slide. Okay, from a product comparison, we put in here 3 slides, and I won't bore you with all the detail. We're going to send you a copy of the presentation. You can look at it, but let's just start with this very first one. We see that the premium for Life Solutions, it's between the NCCW and the Caring Solutions, just a little. The cash value is between those two, but then you look at the death benefit, or the RPU value, it's higher than both of those. When you take that kind of cash accumulation for that RPU value, and then you couple it with the riders we're going to talk about later, you really have a powerful product here. Here's an example of a juvenile, but a higher face amount. Same thing, age 0, and you see here, look at the demonstration. We just skipped down to that RPU value, almost 97,000. Far out distances both the flagship, which was available at that young age, at that high amount, or the NCCW. So it just really shows you. You're going to find as you look through these 3 slides for these comparisons, premium-wise, it's somewhere first or second place among these 4 products. Cash value, it's first or second place. But I think every situation, the RPU value, it's first. And then when you couple that with the riders that we're going to talk about later, I mean, it's an unbeatable combination. So let's go ahead and we can just push through the next 2 slides. Okay, and we get to the issue ages and amounts. So what we've got here, we have a preferred class from 18 to 80. It's tobacco, non-tobacco, sex distinct, male and female. Face amounts 100 to 500. Now what they can do is they can have as little as a $50,000 policy for whole life and a $50,000 term rider on the insured, the primary insured, and that would get them the chance to take advantage of the preferred rates and that improved premium rate class for the higher amount. You have standard class 18 to 80, excuse me. between 20,000 and 500,000. So, you know, for folks buying a lesser amount or someone whose health isn't quite good enough for preferred, you have an excellent opportunity still to sell them a good policy. Then we have juvenile from 0 to 17, which runs from 20 grand to $250,000. What's nice about this with riders and everything, if you've got somebody going in and they can't afford, you know, the full thing as a whole life contract, you could sell them a piece of it as whole life and the rest of it as term, and then you could look to convert the term off. You know, if I wanted $500,000, but I'm not fortunate enough to be able to pay for a $500,000 whole life, I could have a $50,000 whole life, and I get $450,000 a rider on myself. Next slide, please. Okay, it is underwritten. That helps make it a more competitive rate. If these are many of the same tools we use in all of our product lines. You know, the application, we're going to send you a copy. It's nothing extravagant. It's a fairly simple application to follow. We use Milliman to get prescription history and the interaction of drugs, which we do in our other products. We always check with MIB to see the people's prior history with insurance companies. Height and weight, and we have a competitive height and weight table you'll see in the guide. We do go for a motor vehicle. We want to see if they're a reckless driver at young ages, because that is the leading cause of death for young people. But fortunately, we don't see a lot of that happening. Now, if they want to buy a larger policy, then 100 or more, you're looking at a paramed, a urinalysis, and blood work, which is pretty standard for this type of product. I want to draw your attention, though, to that last bullet under underwriting tools. We will get medical records, an APS, it's called, an attending physician statement, but only if it's really necessary. And what I mean is, if there's a question, the underwriter doesn't quite understand something, let's say on an MIB code, there's a pretty good chance they're going to call up and speak with the client and try and resolve that. We get these medical records as really a last resort because it ties up the case. We want to get this moving, get it in and out of here quickly to you and help your client. So we'll only get records as a last resort, and we move a lot of business very quickly. Let me draw your attention to the bottom of the slide, though. I'm really excited to talk about, we do make coverage available to foreign nationals, people that have emigrated here from other countries. If they have to show us they have a permanent residence, they've been here for a while, they're established, they have a job, they have a residence they've been established at. They must have either a social security number, a green card, or a tax ID number. And we will issue up to $250,000 on them, which is very competitive in the market these days. All right, next slide, please. So underwriting classes, as I mentioned, preferred. One thing I want to talk about with the tobacco classification on preferred, what we typically do is that means they haven't used tobacco products in the past 3 years, 36 months for the preferred rate. Our standard rate, it's only no tobacco usage, where it would show nicotine in the past 12 months. And when we say, I should say nicotine, because that includes the gum, the patch, those things. So no nicotine usage in 36 months. It's one of the steps to getting you to preferred. No nicotine usage in the past 12 months. That's one of the steps to getting a standard policy. And then we have our male and female juvenile policies, and they're not classified smoker or non-smoker at that age. Next slide, please. Okay, optional riders. This is where it gets exciting, because this is a product, this policy, when we get done with all this, you'll see this is kind of a policy that you could use for one's entire family with a child, grandchild rider and all that on it. The other thing I'd say is this policy has a ton of flexibility built into it and with all the riders that are here. And it's probably one of the more unique products we've ever offered at Columbia. As you see this list of riders here, a lot of options. 3 at the bottom are new, the children's grandchild rider. As I said before, you've seen it perhaps on our final expense, but you've never seen it over here. It's new and we're happy to have it on this product. The guaranteed purchase option, where they can buy additional amounts of insurance with no questions asked at predetermined times. They pay for that right to do that. And then you have the living benefit riders. First time we've had that on our whole life contracts. Next slide, please. Okay, so ADB, it's double indemnity if they die in an accident. The couple things I'd mention here is, the coverage runs through the client's 100th birthday. When I got in the business many, many years ago, you were lucky if it went to 70 or 75. And I would also point out that it's issuable through 75, where years ago it was probably issuable maybe 60 at the latest. We do allow ADB for the same amount as what's on the base policy, but not to exceed $250,000 on all their Colombian policies. That's the most ADB will take. And this is only available at the time the policy is issued. Next slide. Waiver, like ADB, a pretty standard rider on these types of products. What this does is if the individual has become disabled and they've suffered a disability for at least 6 months, they can file a claim. If it's approved, then it's waiving the premiums while they're disabled. And this goes on from the first policy anniversary on through till the anniversary right at their 65th birthday. Okay, and what you'll see here is issued through age 55, and it's only available at the time the policy is issued. All right, next slide, please. Okay, primary insured rider. So as I mentioned earlier, suppose I wanted to buy a policy and I buy a 50,000, and now I'd like to buy, or I wanted more coverage, but I bought 50 of the whole life. Now I'm going to buy 50 of a rider. I could have a 10-year, a 20-year, or a 30-year rider. So we have that kind of flexibility built into this. And these riders can be issued anywhere from an amount of 5,000 up to 10 times the amount of the base policy, not to exceed a total of 500,000 on the primary insured. So great deal of flexibility here, a lot of options presenting themselves right there just to get the primary insured enough coverage. And as I say, you can convert that term coverage off as they want to turn it into more of a bigger permanent plan. Next slide. Okay, so then you have the ability to put 3 other insureds on as riders, similar type riders, and it could be a 10, a 20, or a 30. And let's say there's 3 people. Let's say they're family members. Okay, we could do that. They don't all have to have the same rider. One of them could have a 10-year, one could have a 20-year, one could have a 30-year. There's no distinction there. They can have varying face amounts. They don't all have to have, 50,000. One could have 50, one could have 200, one could have, 75, whatever. And the type rider or the face amount of the rider does not have to match the numbers that were on the primary insurance rider. So you have a great deal of flexibility here. This is applicable to family members or other people that the primary insured has an insurable interest in their life, say business partners, perhaps. So great deal of flexibility. You could see putting an entire family together here, especially when we get to the grandchild rider, which is coming up shortly. All right, next slide. There it is. So this is a great rider. It helps increase 3 things for you, okay? 1, it increases the premium. Secondly, that means it increases the commission that you earn. But most importantly to me is it increases the persistency of this policy. Because if you sell me a policy and I put all my kids and grandkids on here and someone comes in, let's say a year later and wants to move that policy out for their policy, I look and say, I can't change that. This policy protects my grandbabies. We see this a lot in our final expense market, and we're starting to see the same thing here with this product. It's a great way to insulate that policy. It's a great way to keep you in that home where there's future opportunity, perhaps to sell additional coverage to this insured or other insureds. So let's talk a little bit about the rider itself. Individual coverage on a child or a grandchild. Okay, you can put up to 20 natural born, step, or adopted children and grandchildren on this policy. And I've seen cases where we'll get in 15, 18, 20 children or combination of children and grandchildren on a policy. Now, it's issued while the insured is between the ages of 18 and 80. The child being insured has to be between 15 days and 18 years, which is pretty standard in the industry. You can buy face amount between $2,500 and $25,000, but here we do insist the amount be the same for all the children. So if you're going to buy Susie, a $5,000 rider, then all the kids and grandkids are getting a $5,000 rider. And this stays enforced from the first policy anniversary on or after the child's 25th birthday, because that's their time for their final conversion offer. Next slide, please. Okay, so here, when you sell someone a grandchild rider, there's two versions. There's a paid up version, and that's available if the policy was issued preferred or standard, had no rating. And what this means, if it's paid up, means if the primary insured were to pass away while the rider was in effect, those child rider insureds, those riders would remain in force for them with no further payment of premium until it got to the time to convert later on. So they'd have paid up coverage for that rider until you could give them a conversion opportunity. The non-paid up version, okay, is issued on policies that were rated substandard through Table D, or for children that were added after policy issue, because we didn't get a chance to underwrite them. You know, you have some additional kids or grandkids, they automatically can be put on. Now, in this case, with a non-paid up, if the primary insured were to die while the rider was in effect, the rider will terminate, but they have an opportunity to convert to a permanent policy within 30 days. So we don't leave them high and dry. They do get a chance, but they have to convert right away. We don't cover them and pay their premiums, so to speak, with paid up coverage. Next slide. Okay, this goes a little bit into that conversion we were just speaking of. The rider can be converted with no questions asked, no underwriting, at the for just the amount of the rider between the ages of 22 and 25. But if you wait until the date the rider ends, which is that anniversary right after their 25th birthday, then you can convert it to up to 5 times the face amount, or 5 times the rider amount, I should say. So if that rider was $10,000, you could then convert that no underwriting to a $50,000 policy. For the paid up version, it's up to 5 times the amount of the rider upon the death of the insured if the primary insured died of suicide within the first 2 years. So the conversion rules are a little different if the primary insured died of suicide. The paid up people, we let them go to 5 times right away. The non-paid up people, they can go to 5 times the amount upon their death either way. Okay. I know that's a lot to absorb. It's in the material we'll give you, so take a look at it. It isn't as bad as I probably made it sound. I apologize. It's an awesome rider, and I will stress again, it helps insulate this sale in that home. Gives you a chance to go back and talk to these people, because you're not only providing protection for them and maybe them and their kids, you're also giving it to, you know, their grandkids. And you can cover up to 20 of their descendants, if you will, with one rider. Pretty impressive. Okay, next slide. Here's another new one that gets me all excited. Guaranteed purchase option. This allows coverage to increase without evidence of insurability on the option dates, and I'll touch on that in a minute. But what I want to say, this is an excellent way to protect the insurability of children for their future. As you see in the example, that set of steps at the bottom, you have a 23-year-old has a $100,000 life solutions policy. When they get to 25, they have the option to add up to $30,000 of additional coverage, no questions asked, because they paid for the GPO rider. So now they have 130. Now they buy a home at age 27. Oh, they can take advantage again. They could get another $30,000 of coverage. Now they're up to 160. So they've added 60,000 without having to answer any underwriting questions. And then again at age 31, they could add another 30,000. So what we've done here with this rider, there are 6 times they can take advantage to increase up to 30,000. The lesser of the face amount are 30,000 per each time. That's at ages 25, 28, 31, 34, 37, and 40. But then in addition, you have opportunities within 90 days after they get married, or 90 days after they purchase a home, or within 90 days after they give birth or adopt a child. Now, if they take advantage of one of those special option days, then the next chronological option would be gone. Like in this case below, you see 27, they bought a home. If they hadn't bought the home at 27, they would have been offered the opportunity at 28. That one at 28 is canceled out. But if you have somebody that has a large policy, this is a $500,000 max, you have the ability with this rider, theoretically, you could add another $180,000 of coverage without any underwriting. Very powerful. Next slide, please. Okay, like they say in the infomercials, but wait, there's more. Here we have living benefit riders. These have been very popular in the last few years. I'm excited to see it on our whole life contract here. We've had it on our simplified issue term, the Safe Shield product you're familiar with. This is a great way for someone to accelerate a payment of their policy proceeds if they have a medical situation that warrants them to do this. The thing on this slide I want to draw your attention to is that circle in the middle of the page. These things, there's no additional premium charge. They are free. I'm not allowed to put it in print, but the word is free. So they don't have to pay for it. Unfortunately, if you look at the bottom of the slide, living benefit riders are not available in California at this point. Not to say we won't get them someday, but for those of you who may be from the Gold Coast, we've had a hard time trying to get those approved, as have most everybody in the industry. But we continue to knock on that door, and we hope to get it. When we do, you'll be the first to know about it. Next slide, please. Okay, so the first of the three living benefit riders, the terminal illness rider. With this rider, if the insured is diagnosed with a terminal condition and the doctors have said they have a life expectancy of 12 months or less, they could take up to 95% of the death benefit. And then they'd have money to use to, maybe they want to get their final arrangements made with the funeral home. Maybe they want to help their family straighten out their medical bills before they're gone. Maybe they're in a remission state, and they want to go on that dream vacation they always thought about while their health is halfway decent before the end. They can do whatever they want to do with the money, but it gives them control, and that's what people like about this. You can put it on a policy, issue ages 0 to 80. There are no health questions. There's no additional premium charge. If they accelerate a payment off the policy, then the rider is no longer, it can only be used one time. So next slide, please. Okay, this is the critical illness rider. This is one where they could access funds from their policy if they've been diagnosed with a life-threatening cancer, they have ALS, Lou Gehrig's disease, kidney failure, heart attack, major organ failure, or stroke. Again, you could take upwards of 95% of the death benefit. This is available on issue ages 0 to 75. There are no additional health questions. And again, no additional premium charge. Someone who has been befallen with one of these terrible illnesses, they may need the money to help make arrangements for care at home or any number of things. So it just gives them the ability to take control and put some of the money to use and not burden their family with those additional decisions. And how do we finance that? Next slide. Okay, the third of the living benefit riders, the chronic illness rider. Now with this one, it's a little different. This is one that deals with care for someone who has a chronic illness, and they're defined as one of two ways. First one is the individual is unable to perform at least 2 of the 6 activities of daily living. And we have the little blue box that says what that is. They have trouble eating, bathing, transferring, which means getting in and out of chairs and getting around, toileting, dressing, or continence, which is maintaining their bodily functions. If they've had one of those, if they have a problem with 2 of those for at least 90 days, they could access the rider. Or if you have someone who requires substantial supervision by another person for a period of at least 90 days due to a severe cognitive impairment. And what we're talking about there is it could be dementia, it could be Alzheimer's, it could be an organic brain syndrome, or some type of brain injury. So with those types of situations, you can see where these individuals would need some additional care. So the rider here, you put this on, and they can take up to 24% of the death benefit per year. You can't take 95 at one time, but up to 24. And it's typically, you figure it's going to be used to help provide for that care. And you can do that up to a total of 95% of the death benefit. This is available on policies with issue ages 0 to 75. Now here we do ask 2 additional health questions. We'll touch on that in a second. But again, let me stress, no premium charge for this. This is free. Next slide, please. Okay, so the two questions on the app are pretty straightforward. They deal with the two situations we were talking about. At the time of application,
okay, sounds good. Okay, then. Okay, sounds great. Yeah. Okay, all right. All right, see you tomorrow morning.
at the time of application, what would happen is they'd be asked about, do they have a need for assistance or supervision in doing any of the activities of daily living that we discussed a moment ago? Or the other question is, have you been consulting with a doctor, tested or treated for memory loss, cognitive impairment, organic brain syndrome, those other things that we were talking about where you would need health care because your mind isn't functioning properly. So those questions are on the app. They only apply to this rider. Okay, next slide, please. And so in order to take advantage of the living benefit riders, there's a spot on the app where you check the boxes that they want those. You answer the two questions if they want the chronic illness rider. Then they have to read a brief disclosure statement. And we've got to show a little picture of that and a little marketing piece that goes along with it. The disclosure statement just gives them an overview and discusses how this would work if they had to execute it, and kind of walks them through an example of money coming out of your policy and what your policy looks like afterwards. There's still money there for a beneficiary, just not what you started with because you took advantage of using some of it ahead of time. The other thing is the second bullet where it mentions receipt of accelerated death benefits may affect eligibility for public assistance and may be taxable. The key words in this bullet is may. I haven't heard where it's ever impacted these things yet, but the regulators want us to make it clear we can't predict the future. If at some point the government wanted to go after it, they just want us to forewarn people. So it's in there. It's an easy disclosure for them to read. They have to sign it and you send it in with the application. Okay, next slide, please. So we've got a number of marketing materials. We've shown a little picture of one of our brochures here. We showed you one earlier about the child policy being reduced paid up. But this lists a number of things that you could take advantage of for yourself, and then 3 nice pieces for the consumers. You can get these through our website, or you can call sales support, and they'll be happy to help you with that. Next slide. Okay, so you got a solid product to work with, competitive commission, but the other thing we want to mention, there's an incentive here that goes along with it. This is the notice for our upcoming sales conference next year in Monarch Beach Resort. It's Southern California, right in the Newport Beach area. For people writing business, it's $80,000 of issued and paid business would get you there with a guest, be on us. If you're new and you're just being signed up today in June, you get in at a pro rata amount of $65,230 to make it here. I will tell you, I've been there. I was there and selected this site. It has a phenomenal beach. It has an awesome pool and a great golf course in between. The hotel, the amenities, the food, everything was fabulous. And we have some planned activities in the local area, some whale watching, some other things, little surprises. It's going to be a great time. We'd love to have you join us. So these policies, our final expense, our term, our MDO, they all go towards earning a trip to Monarch Beach next year. Okay, next slide, please. All right, I've got a piece here to talk about questions, but I wanted to make a couple comments first. Looking ahead, one thing that I want to mention is that the product currently is not available in New York State. The New York Insurance Department, I live in New York, so I see this a lot more, but even nationally, I think you've seen New York was hit pretty heavily by the pandemic, the COVID-19 pandemic. And the state government, they have pulled workers out of a number of areas to work with the governor on things related to fighting the pandemic. And from what we gather, it looks like a lot of those people came out of our own insurance department as well. I know the insurance department has been busy trying to address things related to COVID. They'll get back to this filing at some point. We do not have the product in New York. We do expect it. When it gets here, believe me, we will make sure everybody in the country knows about it. Two other things, home collection mode will be coming. We don't have it yet. I expect we'll have it end of the summer. With putting in new products last year, we also put in a new computer system. It's helping us gain leaps and bounds to better serve you and your clients. But home collection is one of those things we have not gotten on there yet. We expect to have that by the end of summer. The other thing is we expect to also have list bill capability. I know some of you folks have cases where you do it with list bill. I can't put this product on a list bill yet, but I expect to have that this year. And again, when all these things come to pass, we will let you know about it. So now let me move on. On this slide, we mentioned our sales support and our underwriting staff are standing by to help you out. Sales support, there's the 800 number, and then you can hit extension star 7582. The star is to help bypass the auto attendant having to list the menu. Underwriting, same home office number, and then star 5904. And that'll get you into the underwriting department. If you haven't worked with us before, we're a company that encourages agents to call and ask underwriters questions. I got a case. What do you think of this? What do you think of that? We've said to people, call us before, during, or after a sale. We're not bothered by that. In fact, we've extended the hours that our underwriters are available to you. As it says here on the slide, 8 a.m. to 8:30 p.m. Eastern Time, Monday through Friday. So the office closes at 4:30, but we have underwriters on call up till 8:30 Eastern, so an additional 4 hours. If you've got a situation you want to call and ask them about it, it's an underwriting question. Don't ask them about cash values or to give you some supplies. Save those for the next day, but you can call and ask them, hey, this fella has such and such. What do you think you'll be able to do with that case? It's a great way to get a head start on something while you're maybe with a client or working on stuff preparing for tomorrow. Okay. Questions. Mark, do we have questions?
Yeah, we've got a few. So earlier when you were talking about smoker versus non-smoker, the question came up, how does this, what about marijuana?
Okay. Oh, an excellent question. People who smoke marijuana will be considered tobacco, they're tobacco users. It does present a risk, a cancer risk, smoking marijuana. So that's what we get from our doctor. So marijuana that is smoked, they will be rated for tobacco usage.
Okay. Next question. Does the term rider include siblings?
That's an excellent question. And, I'm surprised I haven't been asked that one before. I would say the safe answer is for me to say, if they have an insurable interest in their sibling's life, yes. But let me do this. Let me get an answer and we'll get back to folks. I'm thinking that Christine, you're tied up. Mark, could you send a note to Tammy and ask her that question?
Yeah, I'll do that right now.
Okay. Maybe we'll have that before the end of this presentation, folks.
Okay. And the next question is the cost different for different rider options?
Yes. The 10-year, the 20, the 30, they all have different rate structure. Our software will give you all of that. I would encourage you to take it and just, take one as yourself and your family and just put it in and see how it all works together. We will send a link with the email on Monday and you'll be able to go right into our website. You can download the software.
Okay. And the next question is, can we write 50,000 K for LP90 plus 200,000 K term rider? You paid commissions based on the total premium according to the LP90 table.
Yes, that's true. It would be a $250,000 policy, and it's all commissioned at the same rate.
Okay. So the next question is, what is home collection mode?
Okay, home collection mode. Columbian has a legacy. We've been in business for 138 years now, and we have a lot of agents who've supported the company for many, many years. It goes back to the days like for our parents or perhaps our grandparents, where the insurance agent would come by and collect the premium weekly. And so we still have agents who work in that market. And so they have existing families they go to, and they would love this product on home collection mode. For most of you, you're probably utilizing either direct bill or you're utilizing electronic fund transfer where it's drafted out of their bank account.
Okay. Next question, what does renewable to age 90 mean, and how does that work?
Renewable to age 90 means that it stays on the policy. And so, sometimes you'll have a rider and the rider's only going to, you could have a term rider and it's only going to last for a certain period of time, or you'll have a policy that's only going to last for renewable to 90 means that coverage is going to remain there to age 90.
Okay. Next question is, does the chronic rider have a waiting period at the time of claim?
Well, that's an excellent question. What happens is someone who has suffered, they can no longer function all 6 activities. Remember, if they had at least 2 that they couldn't do for a period of at least 90 days, or someone who now needs supervision because they've got dementia or whatever, that has to have extended at least 90 days. So if you want to call it a waiting period, that's where it would be, yes.
All right. Next question is, rather than add the term rider, is it better to write the baser plan and then add the term amount using the Safe Shield term policy? That way the entire amount has the living benefits and you do not need a physical to write 50K with whole life with the 200,000K term.
That's an interesting scenario. I would say 2 very good products, but I would also look at your Safe Shield policy is simplified issue, so it has a load to it that you don't have on the rider. So what I would suggest is take the illustration software, look at it, and decide what you think is your best option. If your client is in good health and the underwriting you don't think is any kind of an issue, you're probably going to be better off for you and for them to just go with the whole thing being the Life Solutions policy.
Okay, so the next question is, can we get the link to quote today? They have two prospects for this weekend. After we get through these questions, I'll show you how to get to the software, the quoting software, right from our website. So I'll go through that in just a second. But,
absolutely. Absolutely.
Next question, how long is term convertible for? And what about at death?
It is convertible. I don't have it in front of me. It's in the agent guide. Do we have a copy of the agent guide we can pop up?
Christine, if you have that, if you can get that ready for us. While she's doing that, we'll go to the next question.
Sure.
Do we see debit card, credit card payment options in the future?
Well, if you had asked me this question 6 months ago, I would have said, I don't see it anytime soon. But I think we all know the world has changed a great deal in the last, 4 or 5 months because of the pandemic. So I think you will see us, really and not that we haven't looked at this a number of times, but we'll probably look at it with maybe from coming from another angle now. So I would expect that you'll see it quicker than I thought you would. But don't read into that. Columbia's got credit card coming this year. I'm not suggesting that. I'm just saying that I think we've all had to rethink how our business works because of the pandemic.
Yeah. Okay, so next question. Do we have a special procedure for COVID-19 to meet with the customer?
Well, we have, with our final expense and our Safe Shield, we have telesales option that uses a voice signature. Mark and I have done some similar webinars like that, where we've explained that to folks. With this product, you can sell this over the phone, but the product's relatively new and we didn't have a lot of time to try and put a telesales process in. So what you would do here is you could write it and you'd have to mail it to them through the mail. They'd sign it and mail it back to you. I will look to put a more automated process in, if you will, because we are still working on trying to get that across all products. But for the moment, what I could give you is you could throw it in the mail and send it to them. And we have agents that are actually doing that right now.
Okay, so next question. Do you need LTC training for the chronic rider?
No, you do not. The rider itself is pretty straightforward. The disclosure statement certainly lays out enough information. There is no additional training needed. It's got a place. It's certainly not something you can put up against a long-term care policy, but I think a lot of the people that we're talking about helping here. Oh, wait a minute. One of my advisors is telling me that LTC, they're not talking about long-term care. Okay. So Jen, what are we talking about? Pop that up there. Well, we'll come back to that. Okay. Well, the answer is it's not subject to those regulations. So, okay.
So back to since Christine has the agent guide pulled up, the question for term, how long is term convertible for, and what about at death?
Which question are you on?
It was one up a few questions ago.
Oh, okay. How long is it convertible, and what about at death? Right, we went back to that one. Yeah, can you find, because it's going to vary depending on the rider, but can you go to the page on the OIR, please? These are excellent questions, by the way. Okay, here we are. Conversion. Each rider may be converted without evidence of insurability to a permanent life plan issued by the company for conversion purposes, subject to our rules as to amount, age, and rating. So maximum conversion age is 80. The conversion must be applied for in writing before the end of the conversion period. So, it goes through to age 80.
And it says 45 days after the death of the primary insured.
Right. Yes. 45 days. Thank you.
Okay. So
that was a great question. We had to actually go to the guide here.
All right. So renewable term rider, does it go up in price when it renews?
Yes.
All right. And then Andre made a comment that this has significantly changed. So next question, will we be able to collect draft premiums from Social Security benefits card?
That one, is a much tougher nut to crack than you would think. We have looked at this for probably the last 10 years. I know some companies do it. I know some companies did it and got out of it. The issue is the timing of the payment and the timing to the client, and then the timing for us to hit the account to get the money. It's controlled by one bank, and that bank is part of the conglomerate that's Transamerica. So we haven't been able to solve that riddle. So until we do, I don't see it happening anytime soon for us. Because if you don't get the timing right, then your persistency is going to be pretty bad.
Okay, so next question. This is a bit off topic from Life Solutions, but is there a possibility guaranteed issue will be returning?
Well, guaranteed issue was a product we had for a number of years, but when we went through and had to redo our product portfolio, we found it just didn't fit our current company, and we would have to price it so that it would cover potential losses would have made it extremely unattractive for you to sell it. And so we know there are a couple companies out there that are very competitive. I can't explain how they do it. My hat's off to them, but we just decided we couldn't do it. So I don't see it coming back anytime soon for us. No.
Okay, and next question is a different child rider costs for two options?
No, the paid up versus the non-paid up, there's no difference in the cost. It's just depending on the circumstance. Children that are added after the policy is issued, you don't get a chance to underwrite them. They just automatically get included. So we can't charge them a different rate, but what we do is we give them a different conversion scenario if the primary insured dies. So that's kind of the offset. But no, it's the same cost whether you're getting the paid up version or the non-paid up version.
Okay. And Christine, can you share the form number for the agent guide?
If you could see the top of the tab for the PDF, it's right there. It's 5440 CFG.
Excellent.
Okay. Okay.
I don't know, maybe Jen can tell us if there are state-specific form numbers for that guide, or if all states use that one.
No, they're all the same.
Okay, she said they're all the same.
Yes. Okay, and then the last question that I have is, what are the companies that offer guaranteed issue?
Okay. Well, and they tend to change every so many years, but the two that are doing it right now and doing it very well, one is Gerber and the other one is Great Western.
And Tammy's just responding to the question about does the term rider include siblings? So. And I'm assuming that that is for the sibling for the primary insured?
Yes.
Okay, so let's see here. Last question that I see is I've been using my own postage for application. Can or do we offer self-addressed envelopes?
No, we do not. I mean, if you're sending this stuff to us, a lot of folks are either, they're sending it through a fax or they're using our secure upload, which is a great way to send something in and get it here much quicker, get it processed, and get you paid much quicker.
So while we're waiting for Tammy, Rick, if you don't mind, I'll go over the software and also the document upload information. So Christine, if you want to pull up our website, there you go. So on our website, under the Producers tab, and it's cfglife.com. So first thing, under training, you'll see under the first section, which is labeled General, the third bullet point down, or the third line down, says Instant Document Upload Training. If you click on that, it gives you a video that walks you through the process of how to upload documents directly from our website, from your computer, from your tablet, and all the information is there. When we send you information on Monday about this webinar, we'll include a PDF or a link to the document upload. It gives you a lot of information about the process and how to do it. Also from the website, under Producers, you'll go to Resources, and then the second one down is Illustrations, Calculators, and Quotes. So if you'll click on that. The first one, CFG Illustration Software, when you click on that, it's going to bring up information about how to download this. And then Christine, if you'll move on to the actual software. This is what it looks like, and these are the 4 products in the top left that you can just do an instant quote for. You can put in the name, the age, male, female, state, what class, if it's standard non-tobacco, standard tobacco, face amounts, fill out all of that, and it'll give you an illustration or a quote that you can use to quote the product to the customer. So, and that was all I had to show there. Let me see if I've heard back from him. I haven't heard back yet. So,
oh, there's a question from Pamela Wood. Thank you, Pamela. Do writers go through underwriting? Yeah, yes, they do.
okay. In lieu of a response from Tammy, we can include that information in the
email?
In the email that we send out on Monday. So you'll have your answers there, and you'll have links to everything that we've shown and everything that Rick mentioned at the beginning.
Well, thank you, Mark. I want to thank you all for joining us today. I hope you found it of value. As I said, we've just started with the product, and it's doing very well. Without really us promoting it, we're going to get out there and push it now. A lot of value in it, a lot of flexibility with all these riders. It's a great policy for an entire family and gives you a lot of options to work with. I would encourage you to look at the material we'll send you, check out the software. If we can help you, like I said, our folks in sales support as well as those in underwriting are standing by. But thank you for your time. Thank you for your business. And everybody have a safe and happy weekend. Hope to see you and speak with you soon. Bye-bye.
Okay, thanks everybody. Bye-bye.